Persistent global inflation and tighter monetary policies have led to higher borrowing costs for sub-Saharan African countries and have placed greater pressure on exchange rates. The IMF finished new regional economic outlook for the region sees growth in sub-Saharan Africa declining to 3.6% this year and warns of a funding squeeze that will impact the region's longer-term outlook. Joining us to discuss this further from our Lagos studios is Wenjie Chen, Chief Economist and Deputy Division Chief, Regional Studies, Africa Department at the International Monetary Fund. It's great to have you on the show this Monday morning. Tell me how the African continent got here with this big funding squeeze from the global space, and how likely is he going to get the 2023 rolling along? Okay, good morning. Welcome to the show. I'm sure you can hear me. My first question, and thank you so much for making it early this morning, Monday, to be with us. I'm asking about the state of the economy on the African continent. How did we get here with this funding squeeze for the continent, taking its headwinds from global space? How likely is it going to get for the rest of the year?
Yes, in fact, many African countries are facing much higher borrowing costs, and this comes because of the tightening in monetary conditions in the world as a reaction to the high inflation, which is partly triggered by the Russian war in Ukraine. Secondly, also sovereign spreads for many African countries have risen precipitously. And essentially all frontier markets in sub-Saharan Africa have been shut out of the Eurobond market since the spring of 2022. And lastly, the appreciation of the dollar to a 20-year high last year has increased the debt service payments of those externally denominated debt for many countries in the region.
Interesting. So do you think 2023, we're getting off to this big funding squeeze? We're getting to the end of the first half, by the way. So what's your outlook on the rest of the year? Do you think this funding squeeze will remain in place? And what do you think the key levers or factors for that will be for the continent taken from the global space?
Absolutely. This condition of the funding squeeze will stay throughout this year and going forward even next year. In fact, much of the countries are facing higher interest rate bills because of the rise in the borrowing cost, and that will put another squeeze on the financing conditions. And even though global interest rates might decelerate in terms of the hike, many countries in the region are facing their repayments in the Eurobond market, in particular for 2024 and 2025 going forward.
Well, there's a chart from this SSA report showing the widening sovereign spreads for sub-Saharan Africa in orange compared to the emerging market bond index in blue. We saw the US Fed and ECB both slow their rate hikes for 25 basis points last week. Can this spread in terms of cost of borrowing for Africa, can it be narrowed if more central banks in Africa ease their interest rates? Do you think that will happen? We've seen one or two rate hike. We're now at another month for the month of May, later this month for interest rate hike. So how do you think this will work out for African countries that are looking to approach the global marketplace?
Certainly, that is one factor in terms of the lowering of the global interest rates. But on the other hand, there's also, in terms of the spreads, reflecting much of the volatility and uncertainty that is in the global market. And the risk repricing is reflected in terms of the high sovereign spreads for African markets. And there, unfortunately, African countries are disproportionately affected because of lower credit ratings to begin with, going into, for instance, the pandemic. So due to these uncertainties and the global risk in general that we see, these spreads are unlikely to come down in the near future.
Well, okay, you noted in your report that Eurobond issuances for sub-Saharan Africa fell from $14 billion last year to 2021 to $6 billion last year. If Eurobonds are less of an option, what is the funding alternative? By the way, Kenya is looking to do about $2 billion or so next in 2024, the global debt market. What's your outlook? Do you think this will be successful?
Since external financing is becoming lesser of an option, the key here is for many countries to look inwards and to mobilize domestic revenues in order to raise the financing needed for their expenditures. And in particular, we are talking about tax revenue administration, strengthening public finance, and then on the spending side as well, to look into the efficiency of spending, how money is allocated. So in that sense, the combination of higher revenue and then lesser spending is much needed in this context.
My final point, very quickly, is there are four main policy priorities and suggestions for Sub-Saharan Africa. Walk me through each of these, and which ones do you think we need to work on very quickly to get Africa to de-risk and to get more funding from the global marketplace?
Yes, so in terms of the four policy recommendations that we have in our report, the first one is on fiscal, which is really to strengthen public finance. And that's, again, in terms of domestic revenue mobilization, and on the spending side to increase the efficiency of the spending, but also more proactive debt management and managing the fiscal risks. Secondly, on monetary policies, we still have very high inflation. In, for instance, half of the countries in sub-Saharan Africa, we see double-digit inflation. And so in order for the risks to manage that, monetary policy has to be very cautious, making sure that really the countries achieve a downward trajectory in their inflation before stepping off in terms of the interest rate hikes. And then thirdly, our recommendation is on managing the exchange rate pressures, and there really to let exchange rate adjust in flexible exchange rate countries, but also at the same time to mitigate the adverse impacts of that, meaning in terms of the most vulnerable people that are going to be impacted by rise in cost of living from the exchange rate adjustment, as well as addressing fiscal policy in terms of working along with monetary policy to enhance those impacts.
Yeah, we appreciate you
Lastly, we have...
All right, thank you so much. We appreciate you walking us through this point from the latest report from the IMF for Africa, Sub-Saharan Africa. Thank you so much for coming through. Wish you all the best for the rest of the